Hi guys, good morning and welcome to Trading Hour. I'm Pavitra Parekh. With me are Rima, and guess who? We have Surbhi back. Surbhi, it's so good to have you back.
Surbhi Upadhyay is back in the house, back on Trading Hour. This truly calls for a bumper start, right? It's a bumper start to the week, expiry week, penultimate one to the budget, and Surbhi's here.
It fits just like a glove, girls, because I remember the last time I was on air was on this show with you two ladies, and just so glad to be back, so glad to be back with the markets, with the economy, businesses, just to join the dots and make sense of everything. That's where the passion is.
And we can't wait to see the magic that you're going to recreate once again with CNBC-TV18. But it's great to have you, sitting with us. A quick word on the markets. It's 18,150 on the Nifty. We're currently up about 2/3 of a percentage point. This has been a very good start to the trading week. The level to watch from here on will be the 50-day moving average on the way up, which stands at 18,283. So we're still about 140 points away from that. That's the upper end of the trading band that we've been seeing. This will be a resistance level to track. It's the banking sector which is outperforming today. The Nifty Bank is up 1%, outperforming the sectoral, the benchmark indices led by strong earnings from ICICI as well as Kotak Mahindra Bank. Now, the Nifty Bank hit its all-time high levels on the 14th of December. So on 14th of December, if you see the Nifty Bank level, from that, the Nifty Bank is down 2.7%. But in that same period of nearly about, 1.5 months, ICICI Bank and Kotak Mahindra Bank have underperformed. So while the Nifty Bank is off 2.5% from its all-time high levels hit on the 14th of December, in that same period, Kotak Mahindra Bank and ICICI Bank are down close to about 5%. Now that the earnings are strong, will there be a bit of a catch-up? Axis Bank will be reporting numbers. Another important factor to watch today is that the Chinese markets are going to be shut for the full year. For the full week. Now, what have we seen up until now? That money is being taken out of India and it's going into China. Now that perhaps the Chinese markets are shut, money cannot go into the Chinese markets, are we going to see some sort of an abatement of the kind of outflows that we've seen so far? The FIs have sold nearly 20,000 crore in the cash market up until now, so that's going to be a factor that we'll be tracking very closely.
Hi. Oh, absolutely. That will be, important for us to watch. So let's see how that plays out, the entire move that we are seeing in terms of flows towards India. But, in terms of stocks, Rima was mentioning the banking pack, so I'm going to skip that and talk about some of the PSU stocks. For this month so far, you've seen the PSU index, which is up 3.5%. The other one which has done very well is IT. So today, again, you're seeing, those moves continue. So some of the top gainers are the likes of Power Grid, Coal India. These ones doing quite well. And this is something that we've been seeing all through January. In addition to those, you have some of the auto names doing very well this morning. And in fact, this week will be important for the autos because a lot of them will be posting earnings as well. So some of the larger auto names are up for you. On the downside, you're seeing Adani Enterprises there. The FPO will open on the 27th of Jan. That is on this Friday. So do watch out for that. A lot of the cement names are seeing some cuts. So Ultratech, Ambuja, I'm just naming a few, but pretty much that entire pack is in the red. And you are seeing some cuts in the new age companies. So the likes of Nykaa, Paytm, Zomato. Nykaa is down, another 3% today. And for this month alone, it's seen a cut of, around 20%. So that's what's really going on. But, overall, Surbhi, 120 points high is not too bad for our markets this Monday.
Not too bad at all, and I guess, it's probably high time, one would say, because India's been underperforming global markets, right, from the month of January. In fact, I did some number crunching just to sort of, come up to speed with things, and we'll talk about more of those data points in a minute from now. But interesting to note that the market's taking a very measured reaction to even the best of earnings. For instance, look at Reliance. I mean, that's really case in point, and, we've been discussing that since morning as well, that it's more about how much more incremental better news you can get from here on. And for me, that really stands out in a reaction to, let's say, Reliance or even in an ICICI Bank, where, yes, no doubt the numbers are fantastic. But on Reliance, obviously concerns about higher capex, big amount of debt, when is the tariff hike coming, things like that. And on an ICICI Bank, incrementally, can you sort of keep blowing away the headlights? That's where the concern is. So more measured reaction coming through. But nonetheless, the buying is back in several names, as you mentioned. Mid-cap's sulking a little bit. And that always tells you that the market is not in sort of total blowout mode right now. It is taking things in a very steady fashion as we get up. It's also, we must remember, ladies, that the 1st of February happens to be a very big red letter day, not just because of the budget, but we'll also have the Fed announcement coming in. So whatever trading bets you're taking, you've got to keep that in mind as well. It's not just the budget factor that we can squarely sort of, react to, you'll have to keep the global setup in
But
mind
this
as well.
time the Santa Claus rally is missing. The pre-budget rally is also missing. And considering that we have a holiday on 26th of January, there are actually only 6 working days left before the budget. So it's going to be an action-packed one because we are in the throes of the earnings season as well. On that note, it's the right time to invite our first corporate on trading hour, DCM Shriram. It's in focus on the back of its Q3 numbers. The company has seen weakness in margins, largely led by the vinyl, chemicals and the sugar segment. Revenues, however, have seen a growth of 19% on a year-on-year basis. To talk about the outlook,